Welcome back to the channel. Today, we're diving into one of the most fascinating and controversial ETFs in the market right now, Defiance's MSTY ETF. MST stands for Defiance Leveraged Long Plus Income Mr. ETF, and it's linked to Michael Saylor's Bitcoin giant, MicroStrategy, MSTR. This ETF combines leverage with option income, aiming to deliver both growth and yield. Sounds like a dream, right? But here's the catch: high reward comes with high risk. By the end of this video, you'll know exactly how MST works, what returns you could expect, and whether it belongs in your portfolio or not. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us, and remember to comment and share. So what exactly is the Defiance MST ETF? It's part of Defiance's Leveraged Plus Income series, an innovative structure blending synthetic leverage and option writing strategies on a single stock. MST aims to track 1.5x the daily performance of MicroStrategy, MSTR, while writing covered calls on that position to generate income. Essentially, leverage for growth, options for income, high volatility for excitement. Let's unpack the mechanics next. The MST ETF's engine has two components: leveraged exposure. It uses derivatives to create a 1.5x exposure to Mr. stock. That means if Mr. goes up 2%, MST might rise around 3%. But the reverse is true: a 2% drop in Mr. could hit MST with a 3% loss. Income generation through calls. Defiance writes covered calls on part of its leveraged position. This generates weekly income, potentially distributed to investors. The goal is to smooth volatility while delivering consistent cash flow. But does it actually work? Let's look at the performance. Since launch, MST has shown wild swings, not surprising, considering Mr.'s Bitcoin correlation. MicroStrategy's stock is heavily influenced by Bitcoin price movements, and MST magnifies that effect. Here's the pattern so far: when Bitcoin rallies, MST tends to skyrocket. When Bitcoin drops, MST falls hard. Weekly distributions fluctuate based on call option premiums. Recent data shows yields ranging from 3% to 10% per month, but that doesn't mean guaranteed returns. These are option-derived, not fixed income. MST is designed for short-term tactical plays, not for the faint-hearted buy-and-hold investor. Let's address the elephant in the room: risk. Here are the major risks MST investors face. Leverage risk: 1.5x leverage amplifies daily moves, good or bad. A 10% correction in Mr. could wipe out 15% of MST's value. Volatility: decay. Leveraged ETFs reset daily, leading to compounding effects. Over long periods, sideways markets can erode returns. Bitcoin exposure: Mr.'s business model revolves around Bitcoin holdings. So MST is indirectly a leveraged bet on Bitcoin, not just tech. Option income trade-off: writing calls caps upside potential. You may get income, but miss big rallies. This makes MST an ETF for active traders, not passive investors. Now let's flip the coin: the reward potential. When Bitcoin rallies, Mr. tends to outperform even direct crypto exposure, thanks to its leverage and business model. And because MST multiplies that exposure and adds income, it can deliver explosive upside during bull runs. Regular distributions from call premiums: a creative way to monetize volatility. For investors confident in Bitcoin's long-term path, MST offers a double-barrel opportunity: growth plus income, all wrapped in an ETF structure. Let's put MST in context with other similar funds. The ETF landscape offers various strategies tailored to different risk appetites. For high-risk investors, the MST fund focuses on MSTR with a hefty 1.5 times leverage, while the MSTY targets covered calls, presenting a slightly lesser risk profile. Moreover, NVDY employs covered calls on NVIDIA, catering to moderate risk takers. ULTI provides a diversified approach through an index basket, appealing to those seeking a balanced risk between moderate and high levels, making it a suitable option for investors looking to optimize their returns while managing potential downsides effectively. MST is riskier than MSTY because of leverage, but potentially more rewarding in a bull market. If your risk tolerance is high and you understand Bitcoin cycles, MST could fit as a small satellite position in an aggressive income portfolio. Who MST might suit: active traders who monitor markets daily, Bitcoin believers who prefer ETF exposure, income investors willing to accept volatility. Who MST doesn't suit: conservative investors seeking steady dividends, long-term retirees dependent on stable income, anyone uncomfortable with large drawdowns. Always remember, MST is not a set and forget ETF. So, is MST too risky or too rewarding? The answer depends on your time horizon and risk appetite. For traders, it's a thrilling opportunity to capture Bitcoin-fueled gains with income potential. For conservative investors, it's a speculative satellite at best. Defiance's MST ETF pushes the limits of what income investing can look like: part leverage, part yield, and entirely high octane. If you decide to add MST to your watchlist or portfolio, make sure it's with eyes wide open. And as always, do your research, diversify, and invest responsibly. If you found this deep dive helpful, hit that like button and subscribe for more breakdowns on high-yield ETFs like MST, MSTY, and ULTI. See you next time.